Will King Dollar reign supreme or abdicate the throne? I'm Bob Stokes with Elliott Wave International. Many investors and financial publications have been expressing a lack of confidence in the prospects for a price rise in the U.S. dollar. One attention-grabbing headline from the Wall Street Journal said, "King Dollar is abdicating, and that's okay. The Fed's stance means the greenback's weakness is likely to continue, but that isn't a disaster for investors who position themselves correctly." The article goes on to say that a weaker dollar is not unwelcome news to investors because a weaker dollar often means higher asset prices on everything. Many hedge fund managers are among the investors who are giving the greenback a thumbs down. These managers are also known as large speculators. Here's more insight from our January Elliott Wave financial forecast. The lower graph on the weekly chart shows the net long short position in U.S. dollar index futures held by large speculators. This cohort of traders are typically trend followers that become more bullish as the trend rises and more bearish as the trend declines. Last week, they were net short 14,875 contracts, which is the largest net short position since March 2011, which was 6 weeks before a major low at 72.696 on May 4th, 2011. The top graph shows Market Vane's bullish consensus, a sentiment measure that tracks the recommendations of market analysts, commodity trading advisors, and brokerage house analysts. This week, the bullish consensus on the U.S. dollar declined to 27, which is the lowest level in 12 and a half years, since July 2008. At the time, the dollar was at the forefront of a strong rally. History shows that large speculators are often positioned on the wrong side at key turns. They are just as much a part of the crowd as most everyone else. Right now, investors would do well to separate themselves from the crowd and focus on the Elliott Wave pattern of the U.S. dollar index. You see, the Elliott Wave model helps you to identify turns and time to act. Get the insights you need by following the link below this video.